So, good evening, everyone. I am Alex versus Emma Young, and for today's lesson, we are going to talk about the chapter 19 entitled Audit Evidence Evaluation. So, to start with, each audit is unique, but the approach to all audits is essentially the same. So, management makes assertion and financial statements about the existence, the completeness, rights or obligation, valuation, and presentation of financial data. So those assertions are examined during an audit. The strength of an audit depends on the relevance and reliability of the evidence gathered. So relevance is determined by the assertion tested. That is, some evidence will be relevant to an existence assertion but only tangentially relevant to the evaluation assertion. However, reliability relates to the quality of the evidence gathered and is affected by the independence of the evidence from the influence of the client or by the quality of the client's overall control structure. So the auditor uses the risk assessment to assist in determining the potential reliance on internally generated audit evidence. So, an effective audit combines relevant and persuasive audit evidence to provide reasonable assurance that the financial statements are free of material mistake or misstatement when the auditor renders an opinion on the financial statements. So it is also important to perform each audit as eventually as possible without jeopardizing quality. So determining the sufficiency and the appropriateness of evidence is a matter of professional judgment. So after the plan audit, procedures have been performed and evaluation of the results will be takes place. So this will be include a review of the audit documentation and discussion with the engagement team and any changes to audit plans as a result of the procedures performed. So the auditor should be satisfied excuse me, should be satisfied that sufficient appropriate audit evidence has been obtained rather. So to support the conclusions reached of the auditor's report to be issued. So auditors should evaluate with professional skepticism. So professional skepticism, the evidence obtained in relations to their accumulated knowledge of course, of the client and the industries in which it operates. Professional skepticism is especially important when management is pressured for result and is also called when the financial statements before they are audited show an unusually favorable result. So let's proceed. This is evaluating the efficiency and appropriateness, of course, of the audit evidence. So an audit of financial statement is cumulative and iterative process. As the auditor performs planned audit procedures, the audit evidence obtained may cause the auditor to modify the nature, timing, or extent of other planned auditor procedures or the audit procedures. So information may come to the auditor's attention that differs significantly from the information on which the risk assessment was based. For example, we have this on the screen. The first example is that the extent of misstatements that the auditor detects by performing substantive procedures may alter the auditor's judgment about the risk assessment and may indicate a material weakness in internal control. Second example is when the auditor may become aware of discrepancy in accounting records or conflicting or missing evidence. And we have also analytical procedures performed at the overall review stage of the audit may indicate a previously unrecognized risk of material misstatement. So in such circumstances, the auditor may need to reevaluate the planned audit procedures based on the revised consideration of assessed risks for all or some of the classes of transactions, account balances, or disclosures and related assertions. So the auditor cannot assume that the instance of fraud or error is an isolated occurrence. Therefore, the consideration of how the detection of the misstatement affects the assessed risk of material misstatement is important in determining whether the assessment remains appropriate. So the auditor's judgment as to what constitutes sufficient appropriate audit evidence is influenced by such as the following: significance of the financial statements in the assertion and the likelihood of its having material effect individually or aggregated with other potential misstatements on the financial statements. So effectiveness of the management responses and the controls to address the risk experience gained during the previous audits with respect to the similar potential misstatements. And also result of an audit procedures performed, including whether such audit procedures identified specific instances of fraud or error. And also, source and reliability of the available information, persuasive of the audit evidence, and understanding the entity and environment, including the entity's internal control. So the evaluation of an audit evidence obtained would address the following matters. We have materiality rather. We have also risk, misstatements, and fraud, evidence, and analytical procedure, as what I've mentioned earlier. So let's start with the materiality. So the auditor shall assess whether the amounts established or overall in performance materiality are still appropriate in the context of the entity's actual financial results. So if a lower materiality than that initially set is appropriate, the auditor is required to determine whether it is necessary to revise performance materiality and whether the nature, timing, and the extent of the further audit procedures remain appropriate. We have also the risks. So the auditor shall determine whether the light of the audit findings, the assessed risk of material misstatement at the assertion level is appropriate. If not, the risk assessment would be revised and further planned audit procedure modified. And the misstatements. The auditor shall determine the effect of the audit of identified misstatements and whether there is a need to perform additional audit procedures. Revision to the audit strategy and detailed audit plans may be required when the nature or circumstances of identified misstatements indicate that other misstatements or misstatements may exist that, when aggregated with known misstatements, could exceed performance materiality, or The aggregate or identified and uncorrected misstatements comes close to or exceeds performance materiality. Let's proceed with the fraud. So the auditor, through the performance of analytical procedures, shall, assess whether previously unrecognized risks of material misstatements due to the fraud are present. Also, he or she shall determine whether the identified misstatements are indicatives of fraud. And also, we have evidence. The auditor shall determine whether sufficient appropriate evidence has been obtained to reduce the risk of material misstatements in the financial statements to an acceptably low level. So he or she shall consider whether there is a need for further procedures to be performed. And analytical procedures. The auditor shall assess whether the analytical procedures performed at the final review stage of an audit. So, you know, corroborate the audit findings or identify previously unrecognized risks of material mistake. So um let's proceed with the factors. Yeah, let's proceed with the factors to consider. The following the following shall be considered in evaluating the sufficiency and appropriateness of the audit evidence. The materiality of misstatements is a misstatement in the assertion being addressed significant and what is the likelihood of it having materiality effect, so individually or combined with other potential misstatements on the financial statements, right? Yeah. So management responses. So is management responses to audit findings, and how effective is the internal control in addressing risk factors? Yeah. And also quality of information. Are the sources of available information reliable and appropriate for supporting the audit conclusions? And also for the persuasive, is the audit evidence persuasive or convincing? Yeah. Previous experience. What has been the previous experience in performing the similar procedures, and where any misstatements identified? Result of perform audit procedures. Do the results or of performed audit procedures support the objectives, and is there any indication or fraud or error? And also understanding the entity. Do the evidences obtain support or contradict in the result of the risk assessment procedures, which were performed to the obtain and understanding of the entity and its environment, including the internal control, of course. And finally, analytical procedures. Analytical procedures. We have here the analytical procedures. Analytical procedures help auditors assess the overall presentation of the financial statements. Auditing standards require the use of analytical procedures in both planning phase and the final review phase of the audit to assist in identifying the account relationship that are unusual. So at the conclusion of the audit team analyzes the data from an overall business perspective. the reviewers are not only looking at the trends and ratios but are asking hard questions, rather hard questions about whether the company's result makes sense in relations to industries and economic trends. Analytical procedures are carried to identifies a previous unrecognized risks of material mistakes, ensure that the conclusions formed during the audit on individual components or elements of the financial statements can be, you know, corroborated and assist in arriving at the overall conclusion. It's to the reasonablest of the financial statements. And for the documentation, so this is the final step in evaluation process. It is to record all of the significant findings or issues in an engagement completion document. This document may be include all the information necessary to understand the significant findings or issues, as well as the cross references as appropriate to other available supporting audit documentation. So this documentation would also include conclusions about the information the auditor has identified relating to the significant matters that are um, inconsistent with or contradict the auditor's financial conclusions. So PSA 260 says communication with those charged with governance. So requires that the auditor shall, what's the word, shall communicate on a timely basis with those charged with governance and responsibilities of the auditor in relation to the financial statement audit. So this includes the auditors. The auditor is responsible for forming all the expressing an opinion of the financial statement that have been prepared by the management with oversight of those charged with governance. And also the audit of the financial statements does not relieve management or those charged with governance or their responsibilities. Yeah. And for the responsibility is I also include an example of a letter sent to management and those charged with governance. So here is the illustrative communication of an audit matters of governance interests. So at the top part in the middle, you should put the company's name or what, like for example Valdez and Corporation CPA's Ayala Avenue, Makati City. So Ayala Avenue, Makati City is their company address. We have also here the date. Yeah, the date. This is the example of the letter. So this letter is for Mr. Manalo. So what says here is that Dear Mr. Manalo, the matters raised in this report arise from our financial statement audit and relate to matters that we believe need to be brought to your attention. We have substantially completed our audit of Metro Express financial statements in accordance with the professional standards. We are expect to release our audit report dated March 20, 2023 as soon as we obtain the signed letter or presentation. So our audit performed to obtain reasonable assurance whether the financial statements are free from the material misstatements. Absolute assurance is not possible due to the inherent limitation of an audit and of internal control resulting in the unavoidable risk that some material mistakes may not be detected. So in planning our audit, we consider internal control over financial reporting to determine the nature, extent, and timing of audit procedures. However, a financial statements audit does not provide assurance on the effective operation of internal control at Metro Express Incorporation. However, it is course over audit certain deficiencies in internal control come to our attention. This will be reported to you because fraud is deliberate. There are always risks that material mistakes, fraud, and other illegal acts may exist and not be detected by our audit of the financial statements. So that is the letter all about. Yeah. And we have also the following is the summary of findings resulting from the performance of audit. So you can um, read this. So you will know the the summary of findings resulting the performance of the audit. And that's all for my report. I hope you guys learn and God bless. Good night.